What's up, millennials? Lemonade came out with a massive new product, so is now the right time to buy? What does the valuation look like, and what does technical analysis look like right now? Well, those are some of the questions we are going to be answering in today's video. Let's get it! A few days ago I added to my Lemonade position, and right now it is the second largest position I have out of 13 stocks in total, my long-term holds of course. I of course notified my Discord premium members. If you by the way want to join, you can do so by going to nesami.com/member. The first month is for free. What I do here is I share my research, I share my buy and sell alerts of course, and I do additional videos about technical analysis. On Tuesday, Lemonade finally came out with their news about the major product they have been working on for the last couple of months. They, of course, have their biggest team working on this product, and it's going to be car insurance. I think car insurance is going to be very massive in the next coming years, or probably even decades, because we are going to see connected cars delivering data to companies like Lemonade, for example, making it very easy for them to analyze that data, use their artificial intelligence to basically personalize the insurance for everyone, all the car owners. And if you want to stay up to date with this new product of Lemonade Car Insurance, of course, you can go to lemonade.com/car and then you can sign up for their newsletter. If we look at the valuation of this company Lemonade, we do see that it is not very cheap if you look at the 2020 numbers. They had a revenue of $94.4 million in 2020, and with a market cap currently of about $5.5 billion, the price to sales ratio would be almost 60, so that is definitely on the high end. But I'm pretty sure they are going to grow a lot in the next 5 years or so. And then let's now dive into the technical analysis, of course. We are on the daily chart, so everything I'm going to be showing you today is on the daily chart. And let's first of all talk about the support, because that support is right now quite heavy, as we can see over here. This blue box seems to hold up price action relatively well so far, and I believe this support has been created all the way back when they IPO'd back last year in June and July 2020, of course. They created a nice high around that $85 level, and right now that seems to be a pretty important level for sure. That was also a major low over here back in December 2020, and then it continued to be a major low here on the 8th and 9th of March in 2021, of course. Now it is creating a support level in this blue box between $85 more or less and $80 on the lower end. At the same time, we do see that we are currently in a downtrend, so basically meaning that we are making lower highs and lower lows. We had a high over here, a lower high, lower high, lower high, and now we're going to see if we're going to create another lower high or if we're going to go make a reversal and make a higher high instead. We of course also saw a low over here, lower low over there, and a lower low over there. So we are definitely right now in a downtrend so far. But that could definitely change in the future, because if we look at the RSI, the relative strength index, of course, we can see that the RSI is actually in a uptrend. We can see that we are making a low over here, higher low, and here we have a higher high, and we are now going to create a higher high. So that means that there is bullish divergence, the price action making lower highs and lower lows, whereas the RSI is making higher lows instead. And also, if we look at the MACD, we can see that there are some positive signals out there right now. We can see that the MACD, which is this blue line over here, has crossed back to the upside, has gone above the signal line, which is the orange line over here. So it crossed the signal line over here in the beginning of March, or a little bit later actually, in the middle of March, and now it seems to be using that signal line nicely as support instead. So that is a pretty positive sign. And also, if you look at the MACD histogram, which are these vertical bars over here, we can see that those histograms, or that histogram, is currently making higher lows, just like the RSI. So we are making a lower or a low over here on the 8th of March. And we made a higher low over here, and now we made a higher low over here. So also that means bullish divergence, the price action is making lower lows, whereas the indicator, in this case the MACD, is making higher lows, which is a good sign. But if we look at the other side, we do see that there is some resistance going on right now, mainly created by the 21 daily exponential moving average, the 21 daily EMA, which is this purple line over here. Now, first last year in November 2020, of course, that purple line, that 21 EMA, seemed to be used as support all the way up to this level of about between $140 and $180 even. But then in somewhere in February, so like the 22nd of February, we saw a massive candlestick below that 21 EMA. And right now we seem to be using that 21 EMA as a resistance instead. So it is definitely holding up, or it is definitely being used right now as resistance. So let's see if we're going to be able to close a daily candlestick back above that 21 daily exponential moving average instead. Plus keep in mind, we are still in a downtrend. So in the short term, I wouldn't mind seeing a little bit of a correction back to the downside because of that resistance we have just been talking about. So it could definitely be the case that we are going to go a little bit back to the downside in that blue box I just created a while ago between $80 and $85 more or less. I do think that we would have enough power to go back to the upside because of all the bullish indicators we have been talking about. So I wouldn't mind seeing a move back to the 55 exponential moving average, which is probably going to be around $100. Then I wouldn't mind seeing a move back to the 21 exponential moving average, and hopefully then we can continue our way back to the upside, potentially going back to the previous resistance level of around $111, of course. So I'm leaning a little bit to the downside for the short term, but I do think in the next couple of weeks I would be leaning towards more upside instead of more downside. If I would have to put a percentage on that, I would say that it's about 65% likelihood of upside in the next coming weeks. Because yeah, do keep in mind that technical analysis doesn't work in 100% of the cases, but it is certainly a powerful tool to have. But if we do see a candlestick closure below that blue box of support between $80 and $85, I would target a move lower, potentially first of all to some support at $75, but I would see a next major support level between $66 and $68 instead. So if you also want to be able to read charts like me, next week I'm going to release my program about technical analysis for beginners. In just a few hours, I'm going to explain to you the most powerful indicators in a way that's very easy to understand. So if you want to stay up to date with that and maybe enjoy a little present, sign up at nesami.com/TA. So I'm very much looking forward to your opinion. Are you buying this dip, or are you thinking we are going to go lower? Let me know in the comments. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!